This trade has serious potential to be a money maker this year. Now, the trade I'm talking about specifically is Swiss yen, but there are some other opportunities that I will go into shortly. But what want to bring your attention to first is the interest rates. So, as an interest rates trader, this is a core aspect of this. So, the reason it's Swiss yen is because what we had was the Bank of Japan at negative interest rates, and over time they brought those interest rates up to zero point 0.5. Now they're on a path to what we call normalization, which means they are holding and hiking. That's their cycle. They're looking to bring rates back up. Now this is essentially the complete opposite to the Swiss National Bank, which are currently cutting rates. They've already cut by 50 basis points, and they're expected to go down to neutral rates, which will be an interest rate of zero, and potentially the word on the street is maybe even negative rates. Now, if you look again at what the Bank of Japan's doing, what the Swiss National Bank's doing, it's a complete flip. They're doing the opposite thing. Now, this gives us a huge rate divergence between the two central banks, giving the yen much more appeal than the Swiss. So if you look, while Japan had negative interest rates and very low interest rates, we had what we call a carry trade. Now, what carry trades are, it's when you would buy a currency, or sorry, you buy a currency pair or sell based on the interest rates. So you would be getting paid positive swaps due to that interest rate differential while that trade is ticking up in profit. And that's what we had on essentially all of the yen pairs: dollar yen, pound yen, Swiss yen, euro yen. Because the yen or the Bank of Japan had such low interest rates, holding long positions or buying it, you would be getting paid very well. That narrative is starting to shift a little bit. So now I'm looking to actually go short. Now you can see this is on the weekly time frame. I'm looking to go short for a very long period of time. This trade idea is actually expected, well, I'm expecting it to last sort of maybe 12 to 18 months. Now you can see I've actually been talking and walking my Discord members through this back since the 4th of February, so almost a month. Now you can see this, all this sort of information, putting headlines in here that back up that sort of idea. And you can see here the Swiss National Bank, actually at one point here, you could see they were expected to go to negative rates. Now this is slightly changed. Obviously, this is a long-term projection, so it's bound to fluctuate, but I'm still expecting at least neutral rates of zero. And again, you can see here more headlines supporting that yen idea. We actually had an increase in inflation within Japan not too long ago, a couple of days ago actually, that does support further rate hikes. Now you can see here, this is the latest position that I just showed you on TradingView. And so far, our members have been making great profit. You can see here, euro yen again here, pound yen, more here, Swiss yen. So you can see we've really been guiding our members through this so far, and we are going to continue to do that. So if you want access to our Discord and you want to see the real side of trading, not the technical order blocks, SMT, market structure ship, you want the real fundamental macroeconomic approach to trading to make some serious money and get on a professional level, we've got 80% off. Click the link in the description. So yeah, I'm looking to hold this one for a very long time. So we went over the interest rate projections, but the current interest rates are actually very interesting as well. So if we look at dollar yen, which is here, so you could go short dollar yen, you could go short on any of the yen crosses. But again, we've already spoken about the projections, which is why Swiss yen is so appealing. But if you look here on dollar yen, or the Federal Reserve interest rate is at 4.5. The Bank of Japan is at 0.5. So that gives us a divergence of 0.4, or sorry, 4%. So that gives us a buy indication, which means that if you buy dollar yen, you will still get paid positive swaps. Whereas if you sell, you're going to be paying those swaps due to negative interest rates. Whereas if we look at Swiss yen, we've got the Swiss National Bank at 0.5. We've got the Bank of Japan at 0.5, giving us a reading of zero, which means if we sell this market, we won't be paying anything in swaps really, because the interest rates are the same. So you will obviously be paying normal fees and things like that, but the actual interest rate fees or the actual raw swap fees are non-existent. Now, if we again just quickly look at the interest rate projections or probabilities, if we are expecting the Bank of Japan to hike their rates and we're expecting the Swiss National Bank to cut their rates, that starts to scale this factor. So actually the Swiss will go down while the yen goes up, putting that carry trade in our favor. So although at the minute we're not getting paid on those swaps, maybe we will eventually if we can see these central banks start to develop a little bit more in their policies. Now, another little factor for this yen idea is what we had during this whole move of the negative interest rates and even very low interest rates. Obviously, we had the carry trade, which we just discussed. But now that sentiment seems to be unwinding a little bit. So you can see we had the intervention back in July last year. And since then, we've not really seen a full recovery. Dollar yen, yes, did push higher, but it's not, it's not come back to where it was. It's not even touched 160. So 160 was actually an intervention level. There was a lot of eyes on 160 at one point a couple of weeks ago, expecting dollar yen to hit back to 160. Ministry of Finance intervened, and that would be sort of the roadmap. But that's not happened. And that's it's one of those little indicators. This isn't obviously something really to base a trade idea on its own, but it's one of those hints that the market sentiment is slightly shifting in the yen's favor. Now, what we could also see is because we had a sort of block of carry trades during this period, a whole sort of constant carry trade, we may see that start to unwind even more heavily. So that's basically what we saw during this intervention. We saw carry trades unwinding, we saw the Nikkei sell off, we saw the yen gain rather a lot of strength very quickly. But obviously now we came back up. So if we can see those carry trades continue to unwind and maybe unwind even more aggressively, that will continue to give the yen strength as we see short positions get taken out or closed out. So in terms of the yen index, what's quite interesting is we seem to be having a little bit of a bottom here. Now, this isn't guaranteed. Obviously, this trade idea completely fall apart. This isn't financial advice. This is my current opinion on the current way I view the markets. Things can change. This is macroeconomics. Anything can happen. But what we're seeing is, a slightly higher low off the previous one. We're breaking above the previous high on the yen or the yen index. In terms of levels, we've got a long way to potentially come back. I mean, look at this move to the downside. So we're all the way down here. It's not outrageous to think we could come up at least back to the highs from 2022, sort of March period. So this is a great factor. Everything looks primed for this trade. But it's not just Swiss yen. So we're also actually we actually took Euro yen. So this was a trade idea in the Discord. This was actually just sort of a very quick intraday trade because it was called on 21st of February, closed out yesterday, which was the same day, 21st. Now, I'm personally still in the trade because I really like the landscape here. So if we just have a quick look here at the Euro economic heat map, we can see it's really not looking good. Now, I'm not looking for a huge take profit, not even similar to sort of Swiss yen, because I'm a little bit unsure in terms of the euro future, because obviously we've got the sort of Russia-Ukraine potential peace deal. I just don't really want to be involved in that too much, which is why I'm looking for a little bit of a shorter take profit down at 150. But this is still even a great move to catch. Obviously, the moves are really dependent on your position sizing, but there's so much potential within this idea. And I think we've had a lot of people making quite good money already, and it's only just starting. So if we look again on Swiss yen, when we had this carry trade move, we had almost a 68% move to the upside. So now imagine we just sell here, hypothetically, and we just catch down to the next weekly low, which is at 137.6. That's a 17% move down. Now imagine if you caught that, that's almost 3,000 pips for just watching a YouTube video. Now, again, obviously this isn't financial advice. I'm not regulated or licensed to do so, but I'm just sharing my view on the markets. And if you can start building your own view, you could add on to it, then you might be in for a really, really strong trade. I genuinely think this is the best trade we're going to get for the next 1 to 2 years, potentially. Again, really depends how the markets develop, how geopolitics develops, how the macros go on. But as things stand right now, this is an amazing opportunity. So guys, this has been short and sweet. If you want full breakdowns, if you want to follow my positions exactly, you can join the Discord. It's free. It's not free, but it's 80% off. Or you can join the free Telegram, which is the first link in the description. In that free Telegram, I do talk about this, not quite as much, obviously, because it's sort of free, but I do walk through this idea a little bit more. And I constantly put updates in there and macroeconomics and chart analysis and things. So you can join that one as well if you don't want to join the, sort of the real Discord where we send signals and analysis and things. So guys, have a great one. I will see you all very soon. Thank you for watching.